Hey everyone, welcome to the refinement on follow through, which is strong follow through. So this came about from over a month worth of testing. I actually went over EU multiple times and ended up going all the way through to 16 months of data, which adding this refinement actually gained an extra 40% plus over that 16-month period. So it's definitely worth adding in there. And just to mention before I go through, it doesn't happen every week and it doesn't happen every month. But over a year, if someone handed you an extra 40%, you would snap their hand off, right? And it's no extra work. It's just looking at the follow through rule with a very subtle but very clear refinement. So before I actually go into what SFT is, strong follow through, I'm just going to go for a recap of the 4-hour directional bias rules that we have currently. Make sure we're all on the same page. So unconfirmed bias is when we have either a singular bullish body close beyond a 4-hour range high or a single bearish body close beyond a 4-hour range low. Let's have a look at what that could be. So there is an example here. Let's say you see this one bullish candle closes beyond what that fractal high would have been the 4-hour range high. So that one bullish candle on its own before that doji would have been unconfirmed because it's a body close above that 4-hour range high and just that on its own. When we get that second candle, then it creates something else, right? Let's try another example as well. Let's see if there's a short example. There's one here actually. So if this is the 4-hour fractal low, range low, and previously we would have had this as the high. In fact, this would have been the high, and this would have been the low. We get this one bearish body close below, and that one candle on its own, closing at 2 a.m., would have been unconfirmed. Then we get a second candle which becomes something else, right? So that's what unconfirmed bias is, where we're sitting on our hands and we're waiting for the next candle to close. Now what's the NFT rule? What's no follow through? Basically reversal, right? So for buys, we're looking for a closed wick, immediate wick beyond the most recent fractal 4-hour range high, or the opposite, we're looking for an immediate wick close beyond the most recent 4-hour low. There is an example here, wick break immediate NFT. You see the 4-hour range high, we wick it, that candle closes through as a wick, so it's immediately an NFT, right? We also could have, let's say for example, NFT to the upside, a bullish body close beyond the 4-hour range high, followed by then a bearish candle close. But we must wait for the bearish candle to close for that confirmation. So we have an example here. So we have the 4-hour range high. Initially we have a bullish body close, and then the second candle is a bearish body close. So it's unconfirmed and then becomes NFT after the second candle closes at, again, 2 a.m. Now on to the follow through rules. So the current follow through rules is basically 2 bullish body closes beyond the previous fractal 4-hour range high or low. And it doesn't matter what order it happens in, and it doesn't matter if it's an initial wick break. We don't care, right? So let's have a look. So for this example, 4-hour range high, we get unconfirmed first with a bullish body close. Then we get a bearish candle, which turns that into NFT. So we'd be looking at sells at that point. Again, that happens to be 2 a.m. So we're asleep at that point. But then we get this second bullish close above that fractal. So that becomes follow through because we've had a second body close above that high. Doesn't matter that there's been a bearish one in between. It was unconfirmed, then NFT, and then finishes as FT. Is there another example we can use? So here's an initial wick break as an example. So initially it was NFT, looking for buys, and then we had 1, 2, 3 candles later, we have a bearish body close below that fractal low, which was the previous 4-hour range low. That then becomes unconfirmed because it's one body close below. And then the second bearish candle here then confirms this as follow through. But you can see it had an initial wick break. There was also a bullish candle in there. So it's quite messy, but it follows the follow through rule. Now, what is SFT? What is that refinement? So what we're looking for in a bullish scenario, we're looking for 2 consecutive bullish body closes beyond the previous 4-hour range high, and it cannot be an initial wick break, right? So if we look at this first example here, initially it was unconfirmed because we only have one bullish candle, right? Let me just hide that for now, we don't need that anymore, and zoom in. What happens on that second candle is we get another bullish body close above the fractal. It doesn't have to close above that first candle, just a bullish candle, so a white candle in this case, above that fractal. It has to be the next one. It wasn't an initial wick break, so it's ticking the rules. So what does that mean now? So if this was a normal follow through, we would have to wait for price to come back into discount to buy. But what we can do in this case is we can continue buying in that direction until we get a shift in the other direction. As in, if we get an NFT or an FT, opposite direction, or some kind of interaction with another fractal, basically. So this would have allowed us to take not only one position here in premium, but a second position in premium, because the 4-hour high didn't form a fractal and didn't interact with it until here. So we had 2 long positions in premium after a momentum push, after a follow through. We're going to call that a strong follow through. Now this is January 2023, where there were 6 trades taken, 50% strike rate, 3 wins, 3 losses. There was a sell that won after NFT, 3%, but the 3 losses then wiped out that gain. So without the strong follow-through trades, that would have been a break-even month. It's not bad, right, to not actually be in a negative for the month. Plus, it's only one pair. If you're trading 2 or 3 pairs, then you're likely going to make it up on the other pairs. But the strong follow-through trades accounted for the profit of that month. So it shows that it's worth it. Not only that, but over a period of just 13 months on EU, so just over a year, there were 12 trades that met the strong follow-through rules, which all won with a 100% strike rate. 12 trades. So we're looking at like 40% plus over a 13-month period. I've not even calculated it over a 16-month yet. So it's absolutely worth adding in. You can see how clean it is. The rules I will put in the description below, so you'll see that. And I advise you to watch this video a second time and then go and do your testing on this as well. Any questions, let me, Tom or Callum know. And yeah, I look forward to seeing your results on this. See you guys later.